The best investors aren't the smartest people in the room, and that's exactly why they win. We often imagine the masters of the financial world as human calculators, geniuses who can see through the matrix of numbers and predict the future with supernatural precision, but the reality is far more jarring. Today I'm breaking down the invisible mental rules successful investors follow, rules most people don't even realize exist. If you miss these psychological shifts, no strategy will save you. It doesn't matter if you have the best software, the most expensive degree, or a massive inheritance. If your internal wiring is fighting against the reality of the market, you are destined to lose. This isn't about math, it's about the hidden architecture of the human mind and how it interacts with risk, time, and ego. Most people lose money in the market without ever realizing the true cause. They think they picked the wrong stock or got hit by bad luck, but the truth is deeper. Think about the average behavior we see every day. People overcheck their portfolios, sometimes dozens of times an hour, as if their staring could somehow influence the price action. They panic sell the moment a red candle appears on a screen because their brain interprets a market dip as a physical threat to their survival. They chase hot tips from strangers on the internet, hoping for a shortcut that doesn't exist. Above all, they have a desperate need to feel productive. In every other area of life, hard work and constant activity lead to better results. In the world of investment psychology, that instinct is a trap. It's not that people don't know what to do, they simply can't emotionally handle doing it. Successful investors think in ways that feel fundamentally wrong to normal human instincts. They have conditioned themselves to move against the grain of evolution. The first major psychological shift is that successful investors are comfortably bored. This is perhaps the greatest competitive advantage in the modern world. While the average person seeks excitement, dopamine hits, and the thrill of the big play, the masters of wealth-building design systems that are intentionally dull. They understand that a portfolio is like a bar of soap. The more you touch it, the smaller it gets. They lean into long holding periods and index funds, embracing the reality that the most effective strategies often involve doing absolutely nothing for years at a time. To the uninitiated, this looks like laziness or a lack of sophistication. In reality, it is a disciplined refusal to pay the excitement tax. When you seek entertainment in your investments, you are usually the one providing the liquidity for someone else's profit. Successful investors view minimal portfolio changes not as a sign of stagnation, but as a sign that their system is working perfectly. They have moved past the need for the market to be their hobby. Boredom means the system is working, and this boredom connects to a much deeper trait most people never develop. That trait is the ability to separate ego from outcomes. For most people, losing money feels like a personal failure. It feels like a reflection of their intelligence, their worth, and their ability to provide. When a trade goes south, they take it as an insult from the universe. This emotional attachment creates a dangerous feedback loop because they are tied to their rightness. They refuse to cut losses, hoping the market will eventually admit its mistake and return to their price. Successful investors don't tie their self-worth to short-term results. They see a loss as a piece of data, not a stain on their identity. They use different language. An average person says, "I failed." A successful investor says, "This strategy failed to meet its criteria." This subtle linguistic shift changes everything. It allows them to remain objective when the world is on fire. The market punishes emotional attachment with brutal efficiency. If you need to be right more than you need to be profitable, the market will eventually take everything you have to teach you that lesson. If this part makes you uncomfortable, that's actually the point. Growth in this field requires a total dismantling of the ego. Another core pillar of the successful investing mindset is that they think in decades, not years. Everyone intellectually understands the power of compounding, but almost no one emotionally understands it. We are biologically wired for time compression bias. We want fast feedback. We want the fruit the same day we plant the seed. This is why people overreact to short-term noise, a bad earnings report, a geopolitical tremor, or a temporary recession. Successful investors have a different relationship with the clock. They plan slowly, act rarely, and review their progress infrequently. They understand that the magic of wealth happens in the final years of a long-term cycle, not the first few months. By lengthening their time horizon, they effectively remove themselves from the competition. While everyone else is fighting over pennies in the daily fluctuations, the successful investor is positioned for the massive moves that take years to develop. They realize that time does the heavy lifting, and people people just get in the way. Most investment mistakes are actually just impatience mistakes dressed up in financial jargon. But here's the part almost no one talks about. The masters of the market don't rely on willpower. They build rules to protect them from themselves. They acknowledge a truth that most are too proud to admit. Humans are inherently irrational. No matter how much you study investment psychology, you will still feel fear during a crash and greed during a bubble. Therefore, successful investors don't trust their gut. They design around their weaknesses. They automate their investing so the decision is made before the emotion arrives. They pre-decide their exit rules when they are calm, so they don't have to make them when they are panicked. They limit their own decision-making power because they know that every time they touch their portfolio, they risk making an emotional error. They don't see discipline as a muscle to be flexed. They see it as a vulnerability to be managed. By building a fortress of rules, they ensure that their worst self can't ruin the work of their best self. This reframes self-control as a strategy, not a strength. Now, this last psychology is the one that quietly separates winners from everyone else. They accept that uncertainty never goes away. The average person is constantly searching for certainty. They want perfect entries, guaranteed returns, and a clear signal that the bottom is in. They wait for things to settle down before they take action. But in the markets, clarity is a luxury you pay for with lower returns. By the time it feels safe, the opportunity is gone. Successful investors have made peace with the fog. They stop waiting for clarity and start managing probabilities. They understand that you don't need to be 100% sure to make a move. You just need the odds to be in your favor and the risk to be manageable. They act with incomplete information because that is the only way to capture the premium that the market offers for taking on uncertainty. They don't wait to feel safe. They move despite the uncertainty, recognizing that fear is a permanent part of the landscape, not a sign to stop. This leads us to the silent advantage no one talks about. Successful investors aren't better at predicting markets. They're better at predicting themselves. They know their triggers, they know their limits, and they know how they will react when things go wrong. While the world looks outward at charts and economic indicators, the winner looks inward at their own pulse. Mindset is the real edge. You can give two people the exact same strategy, and one will become a millionaire while the other goes broke. The difference isn't the strategy, it's the person executing it. It's the ability to stay bored when things are slow, to stay humble when things are good, and to stay rational when everything is falling apart. Successful investing is 10% math and 90% temperament. It is the art of being a rational actor in an irrational world. And as we wrap this up, I want you to take a moment for some honest reflection. Which of these mindsets do you struggle with most? Is it the need for excitement? Is it the attachment of your ego to your wins and losses? Or is it the inability to stop looking at the short-term noise? Drop it in the comments below. This stuff gets much clearer when you actually name it and put it out there. We're all fighting the same biological programming, and acknowledging the struggle is the first step to overcoming it. Successful investing is a journey of self-mastery disguised as a financial pursuit. Remember, your wealth won't grow until your character does. Money grows when emotions finally stop interfering. Focus on the internal work, and the external results will eventually follow. Stay disciplined, stay patient, and most importantly, stay rational. I'll see you in the next one.